Welcome back to Breakthrough, and today we're talking about starting your first company. We've talked about it before, that the market may be slowing, the gig economy may be slowing. So what do? How do you get to that next game? How do you start rolling in a foreign? I'm telling you, this is how you're going to do it. You're going to do it by starting your first company. Now, there's a few things that you have to do to start your first company. You can't just go out there and say, hey, dude, I'm a CEO, right? No, you've got to have a strategy, and the strategy is going to be right here. It's going to be building on what you know. It's going to be talking about get ready with the money and also recon your competition. These are the things you have to do before you get rolling in your first business. All right, so build on what you know. Let's talk about that. Building on what you know, if you're a gig economy beneficiary right now, maybe you're out doing Uber, or maybe you've got a startup restaurant and you're doing some other things on the side. You've got to be able to jump to that next thing that is going to make a huge difference in how you move forward if there is a major hit on our economic condition. And one, you got to be very passionate about what you are doing. That has got to be the case, because if you don't have that passion, you're not going to be able to stick it out when times get a little bit rough. Be prepared to fail. This is another factor that I think a lot of people don't realize, is that sometimes things aren't just going to work. You've got to be able to fail fast and understand and really kind of learn from these failings of what did and did not work in your potential business. Don't go it alone. And this can be a lot of different things. It could be a partner. It could be an advisor. Maybe you've got a group of people that can assist you in kind of getting your startup going. But the main thing is you cannot be a solo guy out there trying to pull it off on your own. And the other thing is you're going to have to build some traction. And building traction can be simple things like, not necessarily getting that first customer, because in some cases you've got to do a lot of groundwork before that first customer actually comes in. So you've got to be able to build traction. And in many cases, that might mean working for free. Yes, working for free and doing things to help kind of get your business up to the next level. So some other things you'll need to do, and this is just some kind of a line list for you here. You need to write your business plan out. And I think a lot of people kind of get a misnomer here of what a business plan is and a business strategy. It's something that essentially you've got to kind of outline what it is your business is going to do, how you're going to achieve it, almost like a SWOT analysis, if you've ever done one of those. It's something that is really going to help you in understanding of how you can move that business to the next level of actually making money on it. The other thing you're going to have to do here is know your competition. Knowing your competition is a very important thing, because if you have heavy competition in a market space, you may not have the perfect product market fit. And I'll talk a little bit about that in a second. But it is important. And in some cases, you might need to bring in a pro, an attorney, advisor, a finance guy, someone that can help you understand whether or not the competition is formidable enough for you to take a step out in that direction, and then get the money lined up. Remember, we talked about that. Getting your cash lined up, and I'm going to show you some ways that you can get that done on funding your startup. And there's a few ways that this happens out there. Obviously, everyone knows friends and family. There are some things that you are going to need to do if you are looking at taking on investors. So make sure that you create your new startup. You do it the right way with the correct business alignment and structure. And there's two real options of how you can do this today: an LLC or a corporation. An LLC essentially is like a corporation in a sense, but it's a pass-through tax entity that goes to the initial owner or owners. Can be a partnership and still be an LLC. Or a corporation. Now, a corporation is where you are actually an employee of that business and the tax doesn't pass through. You actually have two different tax entities: your personal tax entity and your corporation tax entity. So it depends on what route you're going to take. Now, here's the big step. If you are looking on taking on any major investor, and when I say major investors, let's say up to about $1 million. If you're looking at something like that, it is best that you go the route of a corporation. And there's many reasons why, but the biggest reason is to actually protect your investors. Many investors or accredited investors will not invest in an LLC because of the complexity of the organization. They want a C Corp and they want it done in a place like Delaware. Delaware is the place in the U.S. for incorporating. And there's a lot of reasons for the state of Delaware and why they structure their corporation filings in that state to benefit both investors and owners or founders of corporations. So that, if you have not checked it out, and if you have not done that, should you go kind of the next step, and that is, should I get an attorney or go over to LegalZoom and try something like that for getting my corporation? You can do a corporation on LegalZoom. You can do an LLC on LegalZoom. Price ranges are fairly wide depending on what kind of setup you've got. There's a whole questionnaire that you go through on LegalZoom to get that done. Or you can go to a personalized attorney, which is what I recommend. Those steps are going to pay dividends in the long run, especially if the business is successful. And I'm assuming your business is going to be successful, so do it the right way in terms of setting it up and getting ready to line up your money. Now, let's talk about what and how you could go out and get that money. Let's say you're a restaurant guy. You've been a chef and you're saying, hey, I'm going to run a restaurant. I'm going to start and I'm going to launch one. Listen, this is a multi-million-dollar investment if you're going to open a restaurant business. And a multi-million-dollar investment means that you're going to need some real cash. There are some ways to go about this in what is called a Reg D filing. And now a Reg D is a bit different. It's not like a friends and family, which is something that you can do kind of with structured agreements and things like that. But a Reg D is a much more official document that allows you to go out and raise money up to a certain point. Certain states are different, but like here in Florida, it's like $1 million. And you can do it without having to jump through the hoops of the SEC filing. Now that is a big deal for being able to raise cash. So that is something that if you have not researched a Reg D, you should take a look at it. Some of the key takeaways: Reg D lets companies do certain private placement raises capital without needing to register with the Securities Exchange Commission. The company or entrepreneur must fill out a Form D disclosure document to the SEC after the securities are sold. And then you can see here, those selling Reg D must also comply with applicable state laws. So there are some things within your state that you have to do. But the big thing is that you can actually raise cash without going through all of the loops and hoops of getting to that $1 million. Now, once you start to flow over a Reg D, all bets are off. Now you're talking about a full-blown fundraise, and that is a different deal because it is an SEC filing. We won't get into that one. There are some links here below that go into a Reg D and how much you should be aware of on how Reg Ds work. But the number one thing I think you should do as a startup, you are looking at a Reg D, get an attorney and help them walk you through that next step. So there's two differences in Reg Ds. You've got a 506B and a 506C. Basically, it's saying that, you know, on the B side, it's your buddies, it's who you know that you can do this with. On a C side, it's actually anybody that is a accredited investor. Now, this is a huge move that we're starting to see open up in the investment area for starting up business. And I think this is a great thing for startups because now you can go out to an accredited investor, and an accredited investor doesn't really have to be that rich. They just have to have a certain level of income or a certain level of net worth that can get them to the next level. So you have to have a net worth of exceeding 1 million individually or combined with a spouse. You can be an accredited investor, or you've earned income exceeding 200,000 or 300,000 if combined with a spouse. So again, you could go to your dentist, your doctor, your partner, your lawyer, whoever it might be that is in those classifications, and they could be an accredited investor. And this, of course, just changed with a recent change in one of the filings that allowed for startups and companies to actually go out and do this with a Reg D. So this is something that if you are really serious about jumping into your own business, and it's not just going to be a fly-by-night, fill-in-the-blanks deal, but a real deal, then this is one of the best ways to get it going, unless you have bank financing. And bank financing is going to be a different game. I've talked a little bit about bank financing on previous episodes here on Breakthrough and what will be some of the best funding routes that you can take. You've got to check out that episode there because it kind of goes into that as an option. All right, so number 3 tip here on strategy is reconning the competition. This is something that I think you've got to be able to do. Make sure you have a product market fit for what you're doing. Understand what the real problem is, because I think this is where a lot of people kind of get lost on their overall business idea, is they fall in love with the solution, meaning the service or the product, and not with the problem itself. Because if you fall in love with the problem, you're always building a solution to solve the problem. And that's something that I think a lot of startup entrepreneurs really kind of lose their way. So if you look at this chart right here on from product market fit to problem solution fit, it kind of shows the difference of how you go to market with this. And this is something that's been out there for a while. You can check this out over on 4-Week MBA. It's kind of interesting because I think that when you go to a problem solution fit, it's a much better track of being able, it's exactly what I'm saying right here, is don't fall in love with the solution, fall in love with the problem. So getting that into a scenario is you go to a demo phase, then you sell it, then you build it. So you're really learning as you go rather than building it, then demoing it, and then selling it. Because if you're out demoing it, of course you got to have, kind of a minimal viable product. They call that an MVP. You got to have something to start with, but you got to go sell it. And the reason you got to go sell it at its earliest state is so that you can get feedback and understand where you're making mistakes, where things needs to change in your business to be able to move it to that next level, which is building that perfect product to solve the solution that you're trying to fix. So that's something that is a little tricky, but it's definitely something that as you build a new startup business, you've got to go through. Here's the other thing you need to do. Here's a kind of a line list of good topics. One is read this book, Competitive Strategy by Michael Porter. He really goes into the breakdown, and these are some of the things. Know the newbies. So who are the new market entries? Remember, we're in an economy potentially where there's going to be a lot of new startups. And the reason I think there's going to be a lot of new startups is because I think the gig economy is going to start to go away. So these people are going to be looking for things to do, but not necessarily going to work for someone else. So know the newbies. Understand where the entries of new market competition is coming from. Understand the power of your suppliers and your supply source. Those may be a strategy for you to actually get into business. So it depends on what you're doing, but your suppliers could potentially front you almost in the way of cash through supply, which can generate cash. If you're a restaurant, and you have a great supplier that's going to fund you out maybe $100,000 in products for goods and services on food. Now that can be converted into menu items, which then converts out to cash. And that's almost like, in essence, a round of funding for you. So that's one thing you've really got to understand is how your suppliers can play into this. And then the power of your customers, really understanding where the power of your customers can come from. And this is going to be things like demand. It's also going to be the type of customer and the demographic of customer that you're using or you're trying to reach. And then the subs, the substitutes are going to be the other factor here. Substitutes can really be a hindrance on your business because here's what happens in a bull market, okay? And it happened if you look at what was going on with Uber and some of the on-demand delivery stuff. This happened to them. Uber and Grubhub, they go out with these great on-demand services, and what starts happening? All the substitutes started hitting the market and creating a commoditization of what that service was. When that happens, and if that happens in your business, you are toast because it will take your business down. It's just a matter of time. So that's why recounting the competition and understanding how hard it is for what they call a threshold to entry can be for somebody to jump into what you're trying to do as a business startup. So that is something I think that as you guys are building your first startup, those are the things you've got to look at in terms of just the beginning strategies for building the perfect startup and getting it to where it can stay for a long time. So again, if you are looking to build your own startup, maybe you need a tip, hit me up over at paulbarrongroup.com. I'm happy to help you guys out. Shoot me an email. You can also send it to paul@pbg2.com, and I answer all my emails. If you want to follow me on Twitter, just hit me up at Paul Barron over on Twitter. I also answer DMs over there. So make sure and stay tuned right here. We're going to get into some other things here on Breakthrough. Thanks for listening.